Welcome to Markets Now. I'm Michelle Rook along with Darren Newsom, Senior Market Analyst for Bar Chart. And grains all ending lower on Friday. We were actually mixed to a bit higher in the cattle complex and higher in hogs. And I think we had another down day in the crude oil market. Let's bring Darren in to talk a little bit about this grain trade. First of all, 3 days of fund liquidation here. And let's talk about in the grains, what sparked a lot of that technical selling pressure?
To me, what we saw, as you said, was some fun liquidation here for most of the week, in large part, and as it turns out, it could have had a lot to do with the Chinese headline or news about China that came out late in the week, with the Biden administration possibly looking at putting new tariffs on China for lack of complying with phase one. Again, I laugh at that. Phase one was never real to begin with. And so I think there's more going on in the background. I think it probably has something to do with Taiwan, a bunch of other things going on between creating trade tensions between the U.S. and China. But certainly, it looked like funds were concerned. It was almost, basically commodity complex wide. We were seeing fund liquidation. So, when you see it like that, there's usually a general story behind it. And if you pull the strings enough, it tends to come back to China.
Yeah, definitely a risk-off environment there. And like I said, it impacted a lot of markets on Friday. And let's talk about technical damage. Did we do any in corn or soybeans, first of all? We'll pick those off to start.
I don't see any, but that's just because I've been looking at long-term downtrends on continuous monthly charts for both D's corn and November soybeans. So looking at those contracts only back through time, and they both turned lower about a year ago, and the trends turned down about a year ago. So I've been looking for them to continue to work lower, possibly start to build towards some bottoming formations on those long-term charts. And so I actually think it was a better sign that we did push to new or at least test out monthly lows here at the end of the week, set ourselves up. If we can hold in this area through next week in the close of April, then all of a sudden both markets, D's corn and Nov beans, are in position for a possible bullish reversal as we work our way through May. So I don't see it much as technical damage as much as extending or working within the existing long-term downtrends.
Yeah, it did look like weather, though, may have been part of the catalyst to push those contracts lower. And so if the planters keep rolling, how susceptible are we in those markets to, continuing to push lower?
There is a risk, particularly in the corn market. If we actually see planters rolling faster than usual and covering more ground than expected, and this weather pattern that we've seen develop here over April continues on into May and June, then all of a sudden we're looking at more acres and better growing conditions, and that could possibly mean a bigger crop, and that could continue to put pressure on D's. I mean, the test is going to be, it's got its contract low, I believe, at 542 and 3/4, long-term support between 540 and 545. So if we get down to that 540 and it breaks, and all of a sudden we're looking at the round number reliance again, the next target becomes 530, and then we could really see how serious this market becomes.
So let's talk about old crops separately, because we actually went up into resistance areas in both May soybeans and in the May corn futures as we had a big rally, but we've also had these big bull spreads working. And so, talk about that, because that's almost a separate market. Why are we seeing those big inverses, Darren?
Yeah, usually when we look at a market and we see an inverse of this size, I mean, it just screams at us that we're running out of whatever commodity it might be, and that could certainly be the case. I know the U.S. is actually tighter on both old crop corn and soybeans than what's being reported, and we can see that in spreads. We can see it in basis. So we know we're in a tight situation. Are we 40 cents tight with an inverse in the May July corn spread? I don't think so. I think there's some other things going on. Again, I think we've got funds being afraid of the market here going into the weekend. So they didn't want to hold on to July, so they were putting more pressure on July. We also had option expiration in May. That tends to goof things up a bit as well. And again, it's just the Chinese headline as a whole and the overall nervousness in the markets right now. I think there was a lot of things working together to kind of extend these spreads, possibly skew them. But that being said, I don't want to touch them. I want to stay away from these things. I have no idea how far they may want to go next week.
So do they fall apart, though, as we get into delivery or not?
They don't necessarily have to. I mean, if we're tight supplies and, given big inverses, there may not be any deliveries. So we could see commercials continuing to push these markets. And at that point, it's only the commercials playing once they go into delivery. So, all bets are off. There's no daily limits. It could get pretty exciting at that point.
Yeah. So as I mentioned, lower weekly closes for corn, for soybeans. We're actually going to have lower weekly closes as well for the wheat market. And was that the market removing weather premium, or was that, these headlines about what's been going on with Black Sea export movement of grain?
Again, I'm not putting a lot of stock into anything coming out of the Black Sea. Number one, most of the news is coming out of Russia. Number two, Russia's already stolen all the grain it possibly could from Ukraine. So there's really not that much to move anyway. And it's very unlikely Ukraine got anything planted last fall for their winter wheat this year. So I'm not overly concerned about that. I do think headlines were playing a role. And certainly weather always seems to come to the forefront this time of year. Yes, parts of Kansas are supposed to get rain. The driest parts could see some, but a lot of that wheat's basically gone anyway. It's not going to come back. I say that. I also know it's wheat, so it very easily could come back a little bit, but a lot of it's been zeroed out already. So I think weather played a role. We'll just see if we can find some buying here over the next couple of weeks.
So an interesting week in the crude oil market. We filled the gap area that we left after the OPEC cuts were announced a couple weeks ago. And we filled that chart gap and we had a lower weekly close. Where does crude oil go now?
Certainly looks like, again, on its daily chart that it wants to go lower, that the short-term trend has rolled over, and it's got some more. I mean, it left a lot of room to the downside when it posted a $5-6 gap. So I think we could continue to see pressure. I think funds right now are comfortable selling. They're not necessarily doing it because the dollar strengthening. It's just not going anywhere. I just think right now there's a lull in news. There's a lull basically fundamentally in most markets that we look at. And quiet markets like to drift down, and so we could certainly see that continue in crude oil, unless headlines change this weekend. And you never know; that's the wild card. You can start getting some headlines coming out of OPEC, again coming from Russia, whoever, wherever it might come from, could certainly change the direction of these things next week.
Absolutely. And let's end with cattle. So we were mostly higher except for the nearby contracts, and with steady to lower cash trade. April was the only contract on live cattle that really took a hit because we had higher weekly closes in the back months. That's pretty strong bull market going on there, isn't
it? Yes and no. We've got an incredibly bullish cattle market in general. Yes, I mean boxed beef was strong again this past week. Cash did take a little bit of a breather. Not a huge surprise it's been so strong, and that did put some pressure on the April. And the question is, how much further can these markets go? And to me, it's all just going to depend on how much the packers are going to be willing to continue to push cash if boxed beef continues to go higher. Right now, we've got deferred contracts trying to catch up with nearbys, and that's where some of the supports come from. But fundamentally, it still looks, spreads haven't changed. They still look bearish, but basis and cash still a very bullish market.
Okay. Thanks for joining us. Darren Newsom with Bar Chart, and that's Markets Now.